All right, welcome. If you run a business here in the UK, you need to listen up. There's a pretty big wave of green tax changes coming, and by 2026, it's going to hit your bottom line. So, to get you ready, we've teamed up with the specialists over at Pro Tax Accountant. Together, we're going to break down exactly what these shifts are, why they're happening, and most importantly, what you can do about it, starting today.
Okay, let's just jump right in. Here's the big one, the headline that's going to affect thousands of businesses. Did you know that by 2026, the tax on your natural gas bill is set to shoot up? I mean, it's going to completely wipe out that cost advantage it's had over electricity for, well, forever. For years, gas was the cheaper option, tax-wise. That's all about to change. So if your business runs on gas, you really need a plan. And trust me, this is just the first of several big changes coming from HMRC.
Now, to help us make sense of all these, frankly, pretty complex rules, we're leaning on the expertise of Pro Tax Accountant. I mean, these guys are the pros. They specialize in helping UK businesses navigate exactly this kind of thing, turning what looks like a problem into a real strategic opportunity. So their insights are basically the backbone of everything we're about to cover.
So here's what we're going to walk through. First, we'll look at the big picture, the new tax landscape. Then we'll dive into the specifics, your energy bills, your packaging costs, waste disposal, and even your company vehicles. And don't worry, we're not just going to leave you there. We'll wrap it all up with some clear next steps you can take.
All right, Section 1, a new tax landscape. And the key thing here is that this is about more than just simple rate rises. It is so important to get this straight from the get-go. What we're seeing isn't just HMRC bumping up taxes with inflation. No, this is a much bigger deal. It's a complete strategic rethink of the UK's whole environmental tax system. And it's all designed to do one thing: push businesses like yours towards the UK's net zero targets. So what's the big idea behind all this? Well, this quote really sums it up. Think of it like this. The government is using taxes as a tool to make polluting more expensive and to make being sustainable more profitable. Simple as that. They're using the tax system as a giant lever to change how businesses operate. So the key takeaway here, this is all about policy, not just pennies on the pound. Okay, let's get into the nitty-gritty. Section 2 is all about your energy bills, specifically the Climate Change Levy, or CCL. You've probably seen it on your bills. And for anyone out there using natural gas, well, this is where a pretty big cost shock is hiding in plain sight. And this table just lays it all out, clear as day. Take a look. Back in 2023, you can see the tax on gas was clearly lower than electricity. But fast forward to April 2026, and bam, the rate for natural gas jumps up to match electricity perfectly. This isn't an accident. It's a deliberate move by the government to get rid of the financial reason to stick with gas. They want businesses to switch to electric. So that cost advantage you might be used to, yeah, it's about to disappear. Gone. Let's put this into perspective. Imagine you're running a small artisan bakery in London. You've got these big, beautiful gas ovens for your bread. You've also got electric mixers, lights, and so on. Historically, running those gas ovens has been cheaper tax-wise, but by 2026, that's over. The tax on the gas for your ovens is going to be exactly the same as the tax on the electricity for your mixers. Suddenly, you, the owner, have to completely rethink your next big equipment purchase. And this isn't just about bakeries. This story applies to countless industries. So you're probably asking, what can I do about this? Well, here's a massive pro tip for you. If your business uses a lot of energy, the single most powerful tool in your arsenal is something called a Climate Change Agreement, or a CCA. Basically, it's a voluntary deal you make with the Environment Agency to hit certain energy-saving targets. Now, it is a commitment for sure, but the payoff, it can be absolutely huge. I mean, just look at these numbers. Seriously. If you have a CCA, you can get a whopping 92% discount on the CCL for your electricity. 92%. And for natural gas, it's 89%. Think about that. As the main tax rate on gas goes up, getting a discount like this becomes absolutely critical. And here's the catch. If you don't meet your CCA targets, you're back to paying the full, much higher rate. So suddenly, keeping up with your CCA isn't just an environmental thing, it's a top-level financial priority. Okay, moving on. Section 3, your packaging costs. We're talking about the plastic packaging tax, or PPT. And stick with me here, because the real story isn't just about the tax rate going up. No, the biggest challenge, the real compliance shock that's coming, is all about a change in the rules. And it could catch a lot of businesses completely off guard.
So, the actual tax rate itself, that's the tax you pay on any plastic packaging with less than 30% recycled content, that's going to keep going up with inflation. It's already at 223.69 pounds a ton for 2025/26. That part's predictable, but like I said, that's not the real headline. The place where the real compliance traps are hiding is in a rule change that's hitting in 2027, and you need to know about it now. And here's the change. It's a huge one. Look at the difference. Right now, until April 2027, you can count what's called pre-consumer waste, clean scraps from the factory floor, towards that magic 30% recycled content number. But from April 2027, nope, it's excluded. It won't count anymore. This is a massive shift. All of a sudden, a huge source of what everyone was calling recycled content is off the table, and hitting that 30% target is going to get a whole lot harder. So what do? Here's a 3-step plan to de-risk your supply chain. Step 1. Start auditing your suppliers right now. Find out how much of their recycled content is actually just this pre-consumer stuff. Step 2. Start demanding proper, third-party certification for genuine post-consumer material. And step 3. Get your contracts with those suppliers updated well before that 2027 deadline hits. The only way to handle this is to get ahead of it. All right, let's move on to number 4, waste disposal. The landfill tax has actually been pretty good at getting businesses to send less stuff to the dump. But now the government is really tightening the screws. And it's not just about raising the main rate. They're also getting rid of a lot of the reliefs and exemptions that many businesses have come to depend on. Just check out these rates. Yeah, the standard rate is going up with inflation, as you'd expect. It'll be over 130 pounds a ton. But look at the lower rate. That's the one to watch. It's more than doubling, from just over 4 quid to almost 9 pounds a ton. That's a massive jump, and it's sending a really clear signal. The government wants everything recycled or reused, not just the obviously nasty stuff. But that's not all. Here's another one you need to get on your radar for 2027. There's something called the qualifying fines regime, and it's on the chopping block. Right now, it lets a lot of industries, especially construction, pay that much lower tax rate on certain types of processed waste. Well, when that regime gets abolished, poof, all of that waste is going to flip over to the standard rate, literally overnight, and that will mean a huge jump in costs for those businesses. And how about a quick did you know? The government is really cracking down on waste crime. They're proposing a massive penalty for any of your waste that gets found at an illegal, unauthorized dump site. We're talking a penalty of 200% of the standard tax rate. But here's the kicker. Your business could be on the hook for that penalty, even if it was your contractor who dumped it illegally. All of a sudden, who you choose to handle your waste becomes a massive financial decision. Right, let's hit the road for our last big topic, company vehicles. The changes here are going to be felt most sharply by businesses that operate in big cities, because you've got local charges piling on top of the national tax policies, making things even more expensive.
So if you've got a fleet of vehicles in London, this is the question you need to be asking yourself right now. Because come January 2026, the cost of just driving a regular diesel van around central London is about to get a whole lot more expensive. And this comparison just lays out the maths. It's crystal clear. Let's go back to our London baker. Their diesel delivery van, from 2026, that's going to be an £18 a day congestion charge. Plus, if the driver uses it for personal trips, there's a benefit-in-kind tax charge of over £4,000 a year. Now, what about an electric van? Well, the congestion charge is half price, just £9 a day. And that benefit charge, it's zero, nothing. When you add it all up, the annual savings are just, well, they're massive. You can't ignore it. Okay, so we've covered a lot. Energy, packaging, waste, and transport. Let's pull this all together and talk about what you do next. The most important thing is to shift your mindset. Stop seeing all this as just a bunch of annoying tax compliance chores. Instead, start seeing it as a massive nudge to make some smart strategic decisions for your business. So here it is, your 2026 action plan, boiled down to 4 key points. 1. Rework your energy budgets. From now on, just assume gas and electricity have the same tax cost. 2. Get on that packaging supply chain audit. You need to know about that pre-consumer plastic issue before 2027. 3. Run the numbers. What's the actual cost to your business when that landfill tax relief disappears? And 4, if you've got vehicles in the city, fast-track your move to electric. Seriously, these are the 4 big pillars of a smart strategy. Look, every one of these areas is complicated, and the right plan for you is going to be totally unique to your business. For guidance that's really tailored to what you do, you should absolutely talk to the experts at Pro Tax Accountant. You can reach them on WhatsApp or give them a call on 07-985-689912, or just drop them an email at info@protaxaccountant.co.uk. And just a quick disclaimer, the information we've gone through here is for general guidance. It's not meant to be the sole basis for your financial decisions. So before you make any big moves, please consult with a qualified tax expert, like the team at Pro Tax Accountant.